It's time now to check your money with America's money maven, Vicki Brackens. Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial, member SIPC. Vicki, what's going on? Yeah, there's a lot going on.
Yeah, I was about to say, you're going to ask me what's going on. Okay. There is a lot going on, George. This has been a action-packed week. But before I forget, I want to say 2 or 3 things. One, everybody, don't forget to like, share, and subscribe. This is definitely going to be a segment that you would want to share.
Right. I got one for you, Vicki. In
What's
the midst
that?
of that,
what?
Let's be more specific. Hit that thumbs up.
Hit that thumbs up. Okay. Is that what you want me to say?
That's what I want you to say. Hit that thumbs up.
For Hit that crew. Thumbs up.
Yeah.
Okay. All right. Also, George, I want to make sure that everyone understands that for those of you who are listening right now, I'm going to reference some things that you may want to get. So I'm going to encourage you to go to my YouTube channel and scan the QR code when you at the end of the segment to make sure that you get the guides that we're going to be making available to everyone concerning some things that are going to be important around your money and your banking. Okay, George, the subject this week is all about banking, all about bank runs, and I'm going to go through a list of terminology or terms that I think we're going to cover today. So you listen to the list, so at the end of the segment, if I miss any of these, you can bring me back to them. The first one being, you ready?
Was there some banking stuff in the news this week or something?
Yo, George, was there some banking stuff? All right, then. So here's a list of all the things we're going to talk about in the next few minutes. Silicon Valley Bank, Signature Bank, Credit Suisse, unrealized losses, run on the bank, rising interest rates, rumors becoming reality. It's a Wonderful Life. Dropped the nightly deposit into the old man Potter's lap. He dropped the nightly deposit into the mean old Mr. Potter's lap. Those are all the things that we're going to cover this evening.
Yeah. This morning. Let me just say this to you, Vicki. And there's one thing we want to really dispel, because there's some political stuff going on too with this. Have you heard this?
No, help me out here.
Okay. So, and this is before you even get to the technical stuff. But you know what the conservative media is basically saying, that the reason why Signature, what is it called?
Signature Bank,
one of the reasons why Signature Bank failed, when this is dispelled, and this has been disproven, but are you ready for it, Vicki?
Okay, let me hear it.
Woke policies.
What?
They're blaming DEI for the collapse of the bank. I'll just leave you with that. Yes. And in fact, I was watching an interview this past week where one of the GOP members was asked specifically as to whether or not that was the issue, and he dispelled that. But he said, but we still have to look at these policies, because these policies may be a contributing factor. What they're basically saying, Vicki, and again, you haven't even gave your list yet.
No. Okay.
But they're basically saying is that things that are about, things like DEI and community reinvestment, these kinds of things, they're saying these are policies that they're suggesting. Well, that's just the headline. They're tying that to the SVB bank failure. And it was disputed. So I just wanted to add that to you, that we want to get that off the table right now.
Well, I'm glad you're getting that off the table, because that has nothing. And how you could try and blend that all together, I really don't understand, because this is a very, very serious matter for everyone to understand what banks are, what banks do, and what to expect from your bank and your institutions. So let's go back to some reality and some real facts here.
Come on.
All right. So here's the first thing, George, and I'm sure you're going to remember this because you started your career in where?
Banking.
In banking. Okay. As everyone has heard, we had what's called a bank failure. A bank failure meaning that the bank itself could no longer service or provide the liquidity to its depositors within the bank operation. So we had 2 banks, and it's ironic that they were on both coasts. Signature Bank in New York and Silicon Valley Bank there in California that were basically seized by or taken over by the federal authorities to make sure that because they were going to close. I mean, in fact,
Right.
basically they were closing.
And the bank I was talking about was Silicon Valley Bank, not Signature Bank.
Okay. Right. Okay. Silicon Valley Bank. All right. Now, here's the thing that's most important, the next steps that happened. There was what's called a run. This is the technical term, and on the bank. Okay. A run on the bank, which means everybody at one time decided to go and get all of their money. I want my money.
Right.
But what triggered the run on the bank is still the question.
That is a question.
Okay, we still don't quite know what triggered the run on the bank because something happened. And that's the reason I referenced earlier, It's a Wonderful Life. Do you remember that Christmas story?
I do.
It comes every year. Was it Jimmy Stewart?
Jimmy Stewart.
Okay, Jimmy Stewart is so old, it's like in black and white. But there was a time within the story where there was a run on the bank.
Yeah.
And there was a run on the bank, which meant all of the citizens of that community came out and said they're going to the bank and they want their money. Mm-hmm. Why? Because a rumor started, and the rumor was started by Mr. Potter, who was the competitor bank in town. I'm not saying that's what happened here, so hear me, but something triggered the run on the bank. Because what we sometimes think about, George, is that we say, I have my money in the bank. And you get this because we've seen all these pictures of big vaults in the bank and locks and keys and big wheels that you have to turn to get the money out of the vault. It gives you the belief that all the money is sitting in the bank. Is it sitting there, George? You're on mute, my friend.
No, it's not sitting there. As a matter of fact, it's your mortgage, it's your credit card, it's your line of credit, it's your personal loan, it's anything. It ain't sitting there.
It's not sitting there. So, but we have we see this brick and mortar institution that's in our community or, in downtown. And they've got this big vault that we've all seen on TV, and we see all these movies and so forth, and we believe that the money is sitting in the bank. Okay, so if I get scared, I can run down to the bank and get my money. And the truth of the matter is that's not where the money is. And the other portion of truth that we don't discuss a lot is that the numbers of dollars that are there are not the same numbers of dollars that went in. Mm-hmm. Because how does the bank make money, George?
I just told you. Line of credit, mortgages, home improvement loans, home equity loans.
Okay, so the bank's responsibility is to take in your deposits and then leverage them out into other things and to set up lines of credit, to do all types of things. And they also make investments.
Yep. And they charge you interest, and that's the difference between your money and the money that they loan out. Right?
Okay. Now, so what happened with Silicon Valley Bank is basically this. And this has happened throughout the banking system. It's happened throughout the economy. Last year or earlier in the year, last year, we started having issues with inflation. Inflation, is something that the Federal Reserve wants to make sure that gets under control. The way to bring it into control is to raise interest rates. Interest rates going up are not necessarily a detrimental thing if you prepare the right way. But the types of investments that you hold will change in what's called par value, meaning its named value as interest rates go up. Okay. The value of that bond that you may hold, which is one of the things that the bank has, will go down as interest rates go up. But if they hold the bond to maturity, they will get their full value back. But if for some reason you have to sell the bond early, you get what's called a discount. You get less than what you paid for it. And in this case, in a lot of the holdings for Silicon Valley Bank, when there was a run on the bank and everybody said, give me my money at the same time. This is an anomaly because you typically will not have on the bank need to pay everybody or the majority of your depositors at once, which forced them to sell their investments before maturity. And when they had to sell them before maturity, they ended up having to sell them at a discount, which means they had less money than what came in, and they became insolvent. So there was an impact that was not anticipated because the typical operation of a bank is not to have to give all the depositors or the majority of the depositors all their money at the same time.
At the same
on the
time.
same day.
On the same day.
On the same day. If you go back and look at that movie, if you remember,
They were
George
all
said,
outside.
They were all outside. They were waiting for him to open the door. The same thing you saw at Silicon Valley Bank and same thing you saw at Signature. They were all outside waiting for the doors open, and I want my money, I want my money. But what George did on the movie was he negotiated with each one of the depositors, if you remember. And he said, do you really need it all, or do you just need a little bit? And somebody said, oh, I just need the portion for my rent, and I just need the portion to take care of my groceries. So he ended up stretching and negotiating. Well, in this case, the negotiation came from the Federal Reserve and the Treasury, who said, we are going to honor, first of all, not only the FDIC insurance, which is basically $250,000 per depositor per registration. And if you don't understand how FDIC insurance works, we're going to post, as I said, on the segment, a link for you to get a full explanation directly from the FDIC. But they said, we will guarantee those deposits that are there for $250,000, up to the $250,000 limit. But not only are we going to do that, we're going to back the entire deposit structure.
Wow.
Because of the type of institutions that were there, which were concentrated primarily in the tech and VC industry.
Right.
Their operations span out across so many industries across the country. They were considered to be systemically essential, which is a term, too big to fail. You remember that term, which we went through.
Yes.
Before, when we had AIG. I'm glad some of our listeners have been with us for a while, so they'll be able to put all these pieces together, because we've talked about this before. But what happened with AIG during the time period of the financial crisis? Too big to fail, systemically essential, and they needed to shore up the system immediately. I am very happy also when I said someone around that Janet Yellen is still on the job, because if you remember, she took us through the time period right at the end of the financial crisis and in what was called quantitative easing. She's had that experience to look at this situation, because the way they acted this time was so much smoother. Think about it, George. It was so much smoother and so much quicker to stem the tide of any type of additional runs on banks, that it was I won't say it was art, but it was definitely much, much better than any of the other times that or especially in the 2007 time period when we had the financial crisis. Now, I don't know, as I said earlier, and I want to make this very clear, if this was triggered by a rumor that was unfounded, or triggered by a rumor that was based on some facts that someone saw and disseminated this information all at once. But it has been shown that there was a lot of conversation and chatter over the weekend through Twitter and some of the other social media sites concerning the solvency or the structure of Silicon Valley Bank. What we have to pay attention to now though, is what's the aftermath going to look like? What's going to happen next? The great news is that the big banks and all of the regional banks, for what was it, first day, like on Monday, sold off like crazy, and then we recovered some as far as market conditions were concerned. And we haven't had any additional challenges of any magnitude here in this country yet, but we do see something that's happening in Europe right now with Credit Suisse. So as I say, I'm keeping my eyes on that. because we have to continue to remember, George, it's not like when you and I started in banking and in financial services. You remember that? Teletypes?
Oh, yeah. Oh, yeah. Oh, yeah.
Took 2 or 3 days to get messages and information.
Well, no, I'm not going back that far, Vicki, but I get it.
You get it. I think you better go back that far. Okay.
Yeah, but I don't, when I was in banking, we had advanced past at least that.
Okay. I think. But because of the interworkings of banks around the world, we have to be, and when I say we, meaning all economies and all authorities have to be aware of how these interworkings are playing out around the world. So you may hear additional information and additional comments concerning the interworkings of the banking and financial systems around the world, and comments from many entities around the world. Yes, George.
So, Vicki, I'm listening to this. So I want to know, given what has happened, what should I do as a consumer? Or is there anything I should do, or just pay attention to what is going on?
Okay. At this point in time, I'm going to put 2 or 3 things that you out there for you to consider, because we don't want to give specific advice without actually knowing your specific situation.
Yeah. Generally speaking,
you should consider, first of all, if I have more than $250,000 sitting in the bank, is it registered in a way that I have full protection? If not, you may want to sit with your banker and look at how to adequately protect your cash through the FDIC process, because there are things that can be done and should be done as far as the registration and how accounts are structured to make sure that happens.
So this begs another question. Isn't your money automatically covered by FDIC?
Up to a certain level.
Up to $250,000, right? $250,000, right?
Exactly.
So,
right.
Okay, yeah.
Up to $250,000.
So, okay, so I hear what you're saying. Got it.
Okay. Second, if you are an investor, meaning that you have mutual funds or individual investments, and they are concentrated in the financial services arena, particularly in banking, this might be a good time to actually look at your diversification model to be sure that you understand the additional risks that you may be taking at this point in time. Third thing, don't panic. Don't panic. The Federal Reserve has acted very swiftly and very decisively, and the Treasury Department in conjunction has acted together to be sure that the system is operating at its best, in its best way. Okay? So don't panic. This is not the time to do so. I heard some things like, I'm gonna pull all my money out, put it in a can, put it in the backyard because nobody can take it. No, okay. Or I'm going to pull all my money out and change it all to gold and things of that nature. That's not necessary. Do not panic at this juncture, because they have acted very swiftly and very decisively to ensure that the system is working and working well. Well, George, that was a lot. Okay.
A lot, yeah.
Okay, that was a lot. And I hope that everyone understood exactly where things are headed. But if you have additional questions, feel free to give me a call at area code 315-930-4499, or reach out to us at info@brackensfsn.com. Please, again, thumbs up, right? Thumbs up.
Yes, thumbs up.
Share and subscribe. Hit that thumbs up, because we are on a mission, an absolute mission, to make sure that we provide the best information possible for our viewers and for our listeners. And so at this point, George, I will say our plate is full.
All right. Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial member SIPC. She is America's money maven.